Hey everyone, welcome back to Corporate Decoder, the place where we decode the often confusing world of corporate filings. Today we're diving into Gran Tierra Energy's latest report, and trust me, this one's got more twists and turns than a Texas oil well. We are going to be talking about a press release they issued announcing their financial results for the quarter that ended in March, so let's get to it. First off, this report is what's called an 8K filing, which is basically a company's way of saying, hey, something important happened, and we want to let everyone know. In this case, Gran Tierra Energy released their financial and operating results for the first quarter of the year. This report is a quick snapshot of how the company performed in the first 3 months of the year. It covers all the important numbers and operational highlights, giving investors a glimpse into whether the company is thriving, surviving, or just barely hanging on. Think of it as a quarterly checkup for the company's financial health. Gran Tierra Energy is a company whose stock is traded on a few exchanges. You can find their stock under the ticker symbol GTE on the NYSE American, the Toronto Stock Exchange, and the London Stock Exchange. This means that the company must follow certain regulations and keep investors informed. The main point of this 8K is to share their financial and operating results. They released a press release with all the details about how much money they made, how many barrels of oil they pumped, and all the other important stuff that helps investors decide if they want to buy, sell, or hold on to their stock. We can go into the exhibit to see the full press release. Okay, let's dive into that press release. It's like a condensed version of their quarterly report. It highlights the key financial numbers and operating activities. This way, investors get a quick, easy to digest update on the company's performance. Let's look at some of those numbers. One of the most important things for an oil and gas company is how much oil they're actually producing. Gran Tierra's average daily production tells us how many barrels of oil they pulled out of the ground each day during the quarter. More production often translates to more revenue, but it also depends on the price of oil. Netback represents the revenue earned from each barrel of oil minus the cost of getting that oil out of the ground and to market. It's a key profitability measure. A higher netback means they're making more money on each barrel, even after paying for all the expenses. It really measures how profitable they are when they're digging this stuff up and sending it out. Funds flow from operations is basically the cash the company generated from its regular business activities. It's a good measure of how much money the company is actually bringing in, and it helps investors see if the company can cover its expenses and invest in future growth. It is a good measure of if their operations are making them money. Capital expenditures are the money the company spent on things like drilling new wells, upgrading equipment, and other investments that are expected to benefit the company in the long run. These investments are important for maintaining and increasing production. If they aren't spending money, they could be declining or just milking what they have. Net income is what's left over after all the expenses, taxes, and other costs have been paid. It's the bottom line and shows how profitable the company was overall. A positive net income means the company made money, while a negative number means they lost money. Now, let's zoom out and think about what all this means for Gran Tierra. The numbers are one thing, but what's the bigger picture? Gran Tierra operates in a tough business. Oil prices are always changing, and there are political and environmental risks that can affect their operations. To succeed, they need to be efficient, keep their costs down, and find ways to increase production. But they also have to be smart about managing debt and making investments that will pay off in the long run. One of their strengths seems to be in finding and developing new oil fields. If they can keep finding new sources of oil, they can keep growing their production and revenue. But they also face some challenges like keeping costs down and dealing with environmental regulations. Looking ahead, there are a few things that could affect Gran Tierra's future. If oil prices go up, they'll make more money on each barrel. But if prices fall, they'll need to cut costs to stay profitable. They also need to be mindful of their debt. If they take on too much debt, it could make it harder to invest in new projects and grow the business. Is Gran Tierra a buy, sell, or a hold? It's a tough call. They have some strengths like their ability to find and develop new oil fields, but they also face some challenges like fluctuating oil prices and environmental regulations. It really depends on your own risk tolerance and investment goals. Thanks for tuning in to Corporate Decoder. If you found this helpful, please like, comment, and subscribe for more deep dives into the world of corporate filings.